Portfolio Manager Phaswane Mphahlele joins us now to extend this discussion on market developments for the day. A good evening to you. So really, what has been the biggest driver of global market activity on the first day of this new trading week?
Evening to Misang and to all your viewers. Following last week's flow of data that was coming in, it had pointed towards growth that is going to be taking place that is positive. However, with some sticky inflation, and looking in today, when we started the week, we saw the likes of Germany bringing such data through the industrial output, and this has just set up the market to start the week where they're beginning to price some level of a higher inflation for a longer, higher environment, higher interest rates to be holding. We've seen it already in some of the bond markets. We've seen the bond traders are traded, bond yields are higher, reflecting their concern around inflation, especially when the likes of oil were trading above 90. We've seen it that they have a change in perspective around interest rates. The market had initially to start the year, we're on 6 interest rate cuts. Today we're talking 3, and actually to miss and beat on closed doors, 2 is a number. And so that's what we're looking at. And the market now, as we look at this, there is a decline in this interest rate perspective, especially because we saw some of the central bankers are also signaling the fact that we might be seeing a different perspective for interest rate compared to the market. And this is just as spooked some of the markets, seeing some caution. But besides the sticky inflation, it comes with a little bit of growth. And that's why we're seeing some of most stock indices higher, with the JSE up 0.7 today.
Now let's talk emerging markets, because there were some gains earlier based on the 2 factors that you mentioned, the payroll numbers out of the US and the expectations around the rate cuts. We don't know when they will come. However, what we saw from the Rand and its emerging market currency peers, it was looking a bit optimistic. Is that still the case for this week's trade?
Yeah, coming from last week, you said AMs actually took a benefit from those developments, because we saw the dollar was actually down 0.2 to end the week. Whether looking going forward now, it's not clear cut straight that all emerging markets will benefit, because there's data we are looking at. It is indicative of growth, it is indicative of sticky inflation, and in such an environment that is showing some sense of reinflation, the likes of the monetary policy would be rather hawkish to be safe and to keep growth steady, and that means the likes of dollar benefit. Therefore, EM currencies are under pressure. Just let's look at the Rand right now. The Rand has held some gains, but generally it is showing a displacement around the financial market, its local financial markets, whether you look at the bond or the equities, in terms of how it is because of the gains it holds. And it just reflects the market hasn't priced in everything that is going on in the themes of reinflation, and therefore we're seeing now the Rand with its gains through the benefit of higher commodity prices, such as the gold price. That is also having a positive relationship with the dollar. It is helping the Rand price to be at these steady levels. However, in the short term, we can expect some slight weaknesses as data comes out pointing to more growth. We're helping some of that dollar strength. We might see Rand showing some weakness, but overall, EM markets, and most of them should show some weakness.
Thank you for your contribution, as always. Portfolio Manager Fund Managers Phaswane Mphahlele there, talking us through the latest on developments with regards to market activity. Analyst Simon Brown further